What's up, everyone? Welcome to EagleEyeFX. And guys, I'm so happy to be back once again. I'll share with you the markets. It's been a minute since I posted. But guys, I'm back now with some fantastic and amazing lessons that I know that with these lessons and episode that we are going to do, I know guys, you're gonna get a ton of value from it. So now basically what I'll be doing is that I'll be doing some lessons. These are beginner's guide to mastering the forex market, and I'm gonna show you the way you can just simply trade the forex market. And even if you're a beginner, or even if maybe you've been trading for some time but still you're not profitable, I'm sure you're gonna get some value from this. So now guys, remember to smash the like button, remember to hit the subscribe button, remember to like, remember to share this video with your friends and families and those who wants to just be forex traders, so you can actually share with them this thing. All right, you can share with them this video. So now basically there are a few things that I want us to we'll be looking at, and that's what I'll be teaching. So now we have market here. So once we have a market that is it's actually on an uptrend like this, so the first thing we want to look for is we want to look for such a what? We want to look for such a pattern. All right, so you can see that the market is very bullish over here. All right, so once the market is bullish like this, okay, so we want to find this type of structure over here, then that actually a reversal pattern over there, then we know that we are looking for this market to go back or to reverse. All right, so this is the first thing that I want to show you guys, and we are going to look at so many examples till you are able to master this. So the next thing is the opposite of this. So once the market gets here, so let's say the market is on a downward trend. Okay, the moment the market is on a downward trend and it reaches here, we want to look for such such a sort of like a structure like that. All right, so we're looking for this reversal pattern. So guys, remember the whole point is to make this thing to be as simple as possible. Remember, forex is simple but it's not easy. All right, and then the best thing you want to do is you want to be able to simplify this in a way that you can be able to understand. You don't want to complicate things. So yeah, so once we are having a bearish market, we want to look for this type of structure down there. It has to be a significant low for us now to know we are reversing. For this one, let's say the market come from up there, so we want to look for a significant high. It's not just any place, a significant high. Then we know that we are looking for a reversal pattern to there. We are looking for a reversal pattern to the downside. Now the next thing we want to look at or be looking at is once the market, let's say the market is on an upward trend, and then maybe it gives us a what? It gives us something like that. It's not as perfect as you may think, but well, I get the gist of it. So we want to look for a simple and a straightforward what is it called, bullish flag. All right, so just want to look for this bullish flag. So we have an impulse move correction and we have a continuation. Then the next thing we want to look at is the market was bearish, then all of a sudden it gives you a what? A bearish flag. Of course, now we are looking for to go to there. We are looking for a continuation to there. We are looking for a continuation to the downside. Okay, so we are looking for a continuation to there. We're looking at continuation to the downside. And of course, basically last but not the least, we want to look for a double bottoms. This should be very simple for you. And also we want to look for double tops. Okay, yeah, but my double bottoms and double tops are not going to be as straightforward as possible. I'm gonna look for a double bottom like this that has actually broken out for what we call mass psychology. Here mass psychology plays out, then the market reverses, and also here You want to look for a double top that has some sort of like some mass psychology that has actually does what? Some mass psychology that have played out. So those are basically the 6 things that I want us to, to look at, and we'll be looking at on these lessons that I'm gonna share. So make sure that you watch this video over and over again. Remember, you have to really look at it over and over again. Remember to backtest before you actually apply these things. So the first thing I want to start with OD card. So you can see this was a clear structure over there. All right. So let's say maybe I'm gonna take this out. So maybe I can take this out like this. So the first thing we are gonna do the top down analysis. Okay. So remember, we have to go from a higher time frame so that we can get the eagle's view. All right. That means that we can be able to see the market in its entirety, how the market was playing out. So you can see here that the market was very bearish, then all of a sudden the market is bullish. So of course, once this market comes to this level over here, we're expecting to see something. Then we start looking for selling opportunities to there, selling opportunities to the downside. Okay, let me take this a bit there. Yeah, selling opportunities to the downside. Okay, and why did I mark? So I'm starting from the daily time frame, then the 4 hours, and then we're going to take our entries on the 1 hour or on the 15 minutes time frame. So you can see here we had a double top over there. Then the market was very bearish. Then there was an impulse move correction. Of course, I had to correct this level. Then the market was going up. So we want to see how the market behaves once it gets to that level over there. So if we play this out, you can see that, yeah, so the market has actually reached there. So we go to the 4 hour time frame so that we can be able to draw our structure. So you can see that it's clearly visible from there. You can see that it's an area of value. You can see there's a one touch here, there was a triple top over here, then the market actually was just selling to the downside. So what we can do is that we can begin by drawing our playground so that we know where we are. You can start from the daily time frame, it doesn't matter. You can start from the daily time frame, or you can start from the 4 hour time frame. It doesn't matter at all. All right, so this is our 90% over there. So we have a structure over there. Then we go to the 1 hour time frame. So you can see on the 1 hour time frame what we have over there. So that's a significant place over there. So if we play out that, you can see that. So we had that. So we can draw, if you come to the line chart, you see that you can see here, you can see first touch, second touch, and third touch. So it's almost like what we're talking about. You can see the structure has formed. If I take this back a little bit so I can be able to see, so we are interested in that. You see, we are interested in that. And then also, of course, we can use this. Okay, we can cut some of this because this is just volatility, maybe from news. Remember, news create volatility. They don't create what? They don't create direction. So now look at that. What do you see over there? So let's play out this and see how it plays out. So we have our first touch over here. First touch over here, we have a second touch over here, and then this is our third touch. So this is the place that you can just enter the market. All right, enter the market over there, then look at your stop loss. Your stop loss should not be, I recommend a stop loss that is not less than, don't go below 10 pips. All right, okay, and then maybe this could be our first target, which is our 90% rule, where the move started from, that level over there, which is actually close to this trend line. You can see that that's a 6% using a stop loss of 14.7 pips. Let's see how this played out. So you can see that the market just came back, hit our stop loss. It will gonna happen. Let's see how it goes. Now there's something I want to talk about. This is very important. So now once you enter here, you see, once this market you enter here, of course you had 1, 2, 3 touches. You entered your trades over there, and then look, you are actually taken out. Now, one thing I've come to realize, I've noticed as I've been doing my back testing, is that once the market gives you that structure, all right, like that, 3 touches, and then the market goes, I've come to see that, I mean, this is just from my own personal experience and through backtesting, the market tends to come back to this level to give you the double bottom, the double top, sorry, before it does what? Before it just commits itself. That is something that I've actually noticed as I've been doing backtesting. I see that sometimes you take trades and then it takes you out, comes back to your entry, then it goes. So definitely for me, I cannot enter at this level over here. So what I will do is that I will wait for, now this is what if you remember when I was talking about the double bottom, when I talked about the double top, I said I'm interested with the double top that passes to the outside for mass psychology to play out for the double top. And if it's a double bottom, I'm interested with the double bottom that breaks out like that for mass psychology to play out, then the market goes. Now, what is mass psychology? Mass psychology simply means, look at this momentum. You see, this momentum is to actually deceive you that, you know, the market actually, this double top over here has been invalidated, all right? So you see this strong, 2 strong bullish candlesticks here, very strong. So it tells you that this double top has been invalidated. Then you enter your buys because, you know, it has really broken out and done some retest. I'm sure if you go to the 15 minutes time frame, you can see, yeah, you can see. So there's a breakout and you can see this candlestick retest. Then you think that the market is gonna continue going to the upside, then it just goes back. So that is what I was talking about, all right? That is what I was talking about. So I want to see mass psychology first of all playing out before now I can be able to do what? Before now I can be able to enter. And you can see here, there's a very strong what is this called? So there's a doji over here. Then I think this one is almost like an engulfing, yeah, something like that. So in this particular case over here, then what I will do is that now I will enter. Once this candlestick closes, you see the market breaks out, there's some sort of like indecision over here, some rejection, and the market comes back in strongly back into the structure. So what I'll do is that now I will enter my position over there. Then my stop loss is gonna be just above this week over here, that is around 19.6, all right? And then what will be my target? So my target is gonna be this level over here, around 4.93, and then the overall, of course, the overall target is all the way to the downside, which is around 16%, okay? 16% because this 90%, where the move started from, the market will actually play out all the way to that level over there. So let's extend this and see how. So you can see that immediately the market just tags you in, and what happened? Look, it just goes and goes and goes. Now, of course, that's gonna be entries. I'm gonna talk about scaling in, but for now, I just want to show you how to identify these structures. Then we're gonna talk about scaling in, how you can actually scale in and take advantage of this move, because most of the time you see that this move will actually play all the way to the downside. Okay, look at that. You can see that the market just went all the way. A fast take profit has been hit, and then just continues and continues and continues. And most time, you see this market will actually play out either to the 90% all the way to the end of this level, or it could actually play out close to the end. And you can see this one. Look at that. Look at this. It just played out 16% just by knowing when to enter and the right time to enter. So you can see this one could have actually taken you out quickly. Then you give up because the market seems to go back. And you see mass psychology. Once it takes you out here on sells, then you see the momentum here. You think that because of maybe you want to revenge trade, you see that this thing has been invalidated, you enter buys, then it takes you out again, then you give up on the trade, and then what happened after? Look at how the trade just played out. The trade played out all the way to the end, and it played out 16%. Okay, we are going to talk about scaling in. We're going to talk about scaling, how you can scale in and maximize, on this move all the way to the downside. Now, guys, remember, quality over quantity. Okay, even if you just hold this one trade, and remember, we risk 1%. You're risking 1% to make 16%. And let's see, even if you're holding this, how many days could you have held this? So that is let's say that is 1, 2, 3, 4, 5, 6, 7. So in just a week, you've been able to manage to get what? To get a clean 16%. So that is the first thing, the first structure that we're going to look at. Now let's look at another one, odd NSD. So odd NSD gives us multiple of them, and we want to see how this market approach at this level. So maybe we can cut it from somewhere around here. All right, let's just cut it from somewhere around there. And guys, you can just do a lot of back testing on this one. This is very, very powerful and very profitable. So of course you'll have your structure. So remember, you can do your structure on 1 hour, on 4 hours. You can do your structure on daily. So we have this is a high over here, the significant high over there. So what we are doing is that we are expecting to see a reaction. Once we see the pattern we are looking for, a reaction over there, then the market gives us confirmation. Then we know that we are now looking to sell this to the downside. Okay, so that is the first thing. So now let's see how this plays out. So you can see that let's play that. You see, look at that. So let's play that out and see. Yeah, so you can see it begins to give us a structure. Okay, so let's take this out, and then maybe let's go to the 4-hour time frame. So we are interested with what the market and how the market behaves once it gets to this level over here. So you can see that already we have a structure over there. Then we had this. Maybe you can just evolve this to that level. So let's see. Let's continue playing this out and see how it goes. Yeah, you see. So did it come all the way? Let's see if it came all the way. Yeah, very good. It came all the way to that level. So what you can do, let's take this out, or not take it out. What you can do is that we can just make sure you draw your lines properly. So we take that one back over there. Then what we can do is that we just extend this. We're gonna extend that over there, and now you can see clearly the structure has really formed. Look at that. You can see it's clearly that the structure has formed. And look at this. We had our first touch over there, had our second touch over here, then we have our third touch over here. So this is clear structure. So 1, 2, 3. And what has happened here? Look, mass psychology has played out. Has it played out? Oh yes. Why? Because our double top line has actually been broken. So we want this market to come back inside the structure. Then we can even take this as our first target. Then we are continuing to the downside. So let's look at that. So we go to the 1 hour time frame, and on the 1 hour time frame, look at this. All right, now this one you can just enter, right? Like I said, it doesn't mean that all the time the market will come back. It doesn't mean that all the time the market will come back, then it goes down, because already you can see here mass psychology did what? Mass psychology did play out clearly. And then what is this? You can see very strong rejection over there, right? So this could have been a place that maybe you could have just entered, maybe at the close of that, or maybe on the second one over there. Your stop loss is just around there, around 24 pips. Okay, then for our management, then we can say, let's say even we are targeting, this is our first level, which is around 8%, right? Around 8%, yeah, around 8%. And you see, let's see if it plays out or it comes back to take us out, right? Remember, this thing you have to back test. Okay, look at that. Did it play out? Yeah, it came back close to our entry. Now you can see again, guys, what did I say? I've noticed from experience the market actually tends to come back. I don't know why, but it's something I'm not. So even if you miss this level over here and you're waiting for it to come and pick you, then of course this is the place you could have entered. Stop loss could have just been around there, around 32 pips, which is not bad. It's not bad. Or maybe you can just lower it a bit to around 28.5, and definitely now your target becomes around 6.42. So let's see if it take us out, or it look at that. Look at that. It just plays out like magic. All right. So it just plays. It just goes. If you get the right entry and the right place to enter, it just does what? It just goes. Look, even if maybe we are talking about only the first target, all right, the first target being this around 6.42%, you can see that it came all the way. Did it reach? Let's see. And remember, guys, of course we are going to talk about management, whereby once this thing moves, especially like here, it has broken out of this structure. Okay, let's stop there now. Let's stop there. Look at that. It actually hit our target. So of course we are going to talk about management once this thing moves back, and then you can see that it's actually come out of the structure. You keep what? You adjust your stop loss, and then you're just moving down with it, down with it, down with it, down with it. Okay, so now you can see that this is clear, right? You can see that it actually plays out like what? It actually plays out like magic. So you see the structure, you see the touches. Once you see this, you can see already the beginning of the rejection. You wait for it, guys. Remember, there are millions and millions of opportunities. Even if it goes and now doesn't come back, it's fine. But if you want maybe to be sure, then you can see that you had your structure, then you had your clean double top over there, then you now comfortably enter, then you just allow the market to play out. And look at this. Even for the first time, for the first target, you can see that it just hits your percentage with like 1, 2, 3, 4, 5, around 6 days. All right, and you can see this one. Look at that. It actually just continues. Of course, the overall move is it's around 20%, and sometimes may not play all the way 20%. But let's see, like this one, how many percentage it played before it started doing what? Before it started coming back. Let's see. Okay, beautiful. So interesting. Let's look at that. So it played around 16%. So let's say maybe it took you out somewhere around here, around 11%, which is still not bad. All right. And of course, we're not just holding this 11% for all these days. What you're doing is that there are multiple and multiples of what? There are multiples and multiples of entries that you enter inside these structures, inside here, so you can actually just trade one pair and maximize on the moves, guys. All right, guys, so this will be our lesson 1. Watch out, they're gonna be a ton of value. I'm gonna be posting videos almost every day. Go through them, backtest this, backtest this, backtest this, backtest this. You can use the bar replay tool and just backtest this and let it be as simple as possible. Understand the market in a way that that is easier for you to execute your trades. And remember, guys, you don't need to trade all the pairs. You just need to get one pair, you scale in, you trade it, and you can make a lot of money. You can make percentages. Let's talk about in terms of percentages. You can make huge percentages from just getting one quality trade, over just a quantity of so many trades that you actually don't even understand what's happening. So guys, watch out for part 2. It's gonna get better. It's gonna get massive. Remember, guys, to hit the like button. Remember to subscribe. Remember to share these videos. And guys, see you on the second part of this video. Cheers.